This is the second quarter update for the Amplify ETF's Transformational Data Sharing ETF, symbol BLOK. I'm speaking with Michael Venuto. Michael, let's get right to it. Is the crypto winter over?
Yeah, if I knew that, I'd have a very different lifestyle. Look, crypto has climbed a wall of worry, right? And most of that has been caused by lack of clear regulatory insight, right? Which forced people who wanted to invest in this area to go do it through nefarious, fraudulent companies rather than through regulated entities and products, simply because the government's not ready to make their decision on how to regulate this. So, I can't say it's over, but it does seem, especially with big players like BlackRock getting involved, that there may be some regulatory changes coming, as well as a lot of the garbage has been flushed out, and then you always have the build up to the halving. That said, at this point, I don't care. Block as an investment strategy is about the technology, the concepts behind it, the cyclicality of bad actors versus pump and dumps versus all the things that happen in that wild west of crypto. That's not really that relevant to Block. Block is very much exposed to the technology, and the only crypto that it has any quasi indirect exposure to through spot Bitcoin ETFs in Canada or through micro strategies is Bitcoin. And without a doubt, Bitcoin's been the winner here, right? It's the one thing that they have given regulatory clarity on, that it is a commodity, that it is not a security. Um, and, a lot of the garbage that's happened, it might have got some, mud thrown at Bitcoin, but it shrugged it off because it wasn't part of it. So I hope it's over. I hope we're in the summer for a long time, but for Block, I don't know if it matters anymore.
So, Michael, you talked about the halving. For folks
Mm.
new to the space, could you explain it to viewers like they're in eighth grade?
I could try. So there's narratives around the concept of Bitcoin that um, it's an inflation hedge because there's a limited supply, right? So we know that there are only going to be 21 million Bitcoin. Um, we know that because in the code for solving the problems that create more Bitcoins, they every 4 years, not to the exact date, but every 4 years, the amount you get per mining iteration every 10 minutes gets cut in half. So, unlike our fiat dollars that we print more whenever we want, with Bitcoin, you get half as much produced every 4 years. Now, there's 19 million ish already minted. We're only going to 21 million. The halving is actually going to make that take about another 100 years, a little more than 100 years. So, by the time we get to the end, every 10 minutes, you're going to be minting a tiny fraction of a Bitcoin. And those could be worth $10 million, $20 million by then. Or we might not even be talking about dollars in 100 years. Could be renminbi or something new that we don't know. So, or it could be priced in Bitcoin. Bitcoin priced in Bitcoin. One Bitcoin equals one Bitcoin. Like, who knows how this is going to play out? But what I do know is the monetary policy built into the code of the largest public blockchain is deflationary or disinflationary in its amount of outstanding.
Excellent. So, today, artificial intelligence is all the buzz. As a
Mm.
portfolio manager in the blockchain space, how do you look at artificial intelligence and its applications?
I'm extremely excited about all the things coming on with AI. I've poured myself into this to learn quite a bit about it. Got to spend some time with Dr. Stuart Russell, who's really the person who's advising all the policymakers around this. I think it is life changing. However, like most things that are life changing, the valuations around many of the stocks associated with it are probably a little bit ahead of themselves. Right? It's going to be very difficult to figure out how it becomes revenue in the short run, even though it's massively transformational in the long run. To that end, there's something that Dan Weisskopf and I are writing about for this quarter's blockchain update, uh, which is the breadth of the market, right? So year to date, there are like 7 stocks that have created all the value in the S&P and the QQQs, and all 7 of those stocks have some sort of AI narrative. If you didn't have those 7 stocks, you look like the other 493-ish, you're probably up 1 or 2%. Now, that means there's no breadth, right? Like it's just there's nothing there, right? The returns are all coming from this AI narrative that's kept things up. Block has had an enormous amount of breadth, right? 20 of our positions are up more than the Nasdaq, right? Our returns, 30% of our returns this year are coming from our top 7 names. So that means 70% is coming from the rest. Whereas it's the exact opposite with the broad-based indexes. So one of my exciting things about how Block has worked this year is really the breadth of ability to still be a diversified fund in that, we're never more than 25% concentrated in any given sector, while finding all these companies with the breadth of returns. It's been really exciting this year.
Well, earlier you brought up spot Bitcoin ETFs in Canada, which you have experience with. Another popular talking point today is what's going to happen with a potential spot Bitcoin ETF here in the United States. I'm sure as a heavy influencer in this space, you've been asked this question ad nauseum for a long time. But today, as we're recording this in the middle of 2023, what are your thoughts around a spot Bitcoin ETF in the US?
So I'm in multiple conversations with people on this, not only from you know being a thought leader in this area, but also from people trying to help people get something launched or converted or in that space. Um, the message that I'm hearing from the lawyers that talk to the SEC and the exchanges that talk to the SEC and the various reporters that I know that have talked to the actual regulators is it's going to sound terrible, but nothing's changed. The only difference is BlackRock got in the game. The surveillance sharing agreements, they sound good, but the real message is if you have a surveillance sharing agreement on an unregulated exchange, that's inefficient. I do think it starts the narrative again. A lot of people think there's this wild card that, Grayscale wins the lawsuit and the SEC takes this surveillance sharing agreements as an out and say, okay, you know, here's a way that we can save face and say we did this. I'm not a big believer in that wild card. I'm not a big believer in that BlackRock knows something. I think that this is still 18 to 24 months of slugging it out with the regulators. I do think we will have a spot Bitcoin ETF someday. I seriously doubt it's on December 27th of this year when the ARC filing is supposed to get through. I think there's 3 or 4 more hurdles. I've been on record for 2 or 3 years saying, I love you, SEC, but you're not the regulatory body that gets to decide what what Bitcoin is for the US government. That's probably got to come from Congress or an administration, and then the SEC can decide how to protect investors' connections with it. It seems highly unlikely that this tiny little thing of an ETF is going to really outline the US government's, future vision for Bitcoin. So uh, that's kind of where I stand. 100% sure it's going to happen. My timeline would probably be 24 months.
Well, we could do a whole interview just based on that topic, I'm sure. Let's pivot
Absolutely.
though. Let's pivot and
Yeah.
talk about your fund.
Mhm.
BLOK. What is, for people new to the fund, what is the investment thesis behind the ETF?
It's quite simple to get exposure to the blockchain, that technology and how it's transforming how we do commerce, how we share data, how we deal with logistics, how we do anything in the world of finance. And to that end, we break it up into a number of segments. The obvious one is the miners. Most of the passive funds out there in this space, they focus pretty much solely on the miners. We're a diversified fund, so we go out beyond that. We also have transaction companies like Coinbase and Square and PayPal. We even have a retail name that has been a rock star for us this year, Overstock. And people are like, what does Overstock have to do with it? They have a venture arm that's like creating blockchains for trading soybeans and wheat and corn. Like there's all kinds of things that are happening that are amazing. Um, uh, you also have venture firms. You have Galaxy Digital. You have our exposure to Bitcoin through MicroStrategies and the spot Bitcoin ETFs in Canada. We've got a couple of new positions in there as of late as well, but the whole portfolio is really designed to capture the upside of this change towards blockchain.
So this fund is an actively managed fund that requires a process. What do you and your team go through when you're selecting sectors and securities for the ETF?
There's not a position in here. We'll call it. I don't call every company, um, but we call every company that's not an absolute blue chip. Now I mentioned the 7 stocks that have really pushed the S&P and the Nasdaq up. We don't own any of those. Some of them are owned in other blockchain associated funds. What we look to do is understand the value chain, right? So we go and meet with managements of all these miners, of all these transactional companies, of things like that, and we want to know who they're banking with and who they're working with and who they're getting their equipment from, and what do they like about the equipment. Do they think the other clients in the supply chain are helping or are doing well? Do they like this? Do they like that? And that helps us decide which are the most interesting companies in that grouping. Um, if something's a pure play, we're going to make it a 3% weight, let it float up to 5. If something's less of a pure play or too small, 1% weight, let it float up to 3. Um, we've initiated recently 4 new positions, all of which we put at the smaller weights, but we've also graduated some things up. Like we increased Canaan, which is an equipment maker for Bitcoin mining, because we've been hearing some good things from the miners about working with them. Uh, we did initiate small positions or non-core positions in Alibaba and Mercado Libre, both of which have private blockchains that are in the e-commerce, and we wanted more exposure to the emerging markets since we've had such a run in the U.S. markets. We also added Franklin Resources, the ticker BEN, because they're doing a lot to use blockchain in the background for admin of their funds as well as investing in certain companies. Ironically, we did that while slightly decreasing Wisdom Tree, because Wisdom Tree is a company that we've done very well with and is very much involved, but has gone through our 3% hurdle. So we wanted to add something new in. And finally, this one's kind of interesting. Although we don't own any of those 7 stocks that have pushed the QQQs or the NASDAQ up, we did initiate a position in NASDAQ, and we initiated it before the BlackRock filing. We did that under the knowledge and seeing what Nasdaq is doing in crypto indexing. We know they're working on crypto custody, um, and we're very hopeful that they can really step it up and become that regulated exchange that's really going to be necessary in the future for blockchain and Bitcoin.
Michael, thank you for your time today. To learn more about the Amplify ETF's transformational data sharing ETF, symbol BLOK, visit bloketf.com. Thanks, Michael.